Guys, congratulations. Thank you for making it here to this educational video that's going to share with you guys the truth about annuities, what you need to know before you buy one. First and foremost, it's a big product. The word annuity itself, when you get down to the root word, just means annual. That's all it means, annual. How your money behaves annually, how you can get paid annually, that's what it is. And this is the best investment if you know what you're looking for. So if you've been researching annuities, you've probably seen a lot of conflicting opinions online that some say it's the safest place for retirement money. Others say they're full of hidden fees. The truth, both sides are partly right. In the next few minutes, I'll break down exactly how annuities work, the different types, and the questions you need to ask yourself before choosing one. Let's clear up the first big thing, which is it's the biggest myth. Let's talk about the fees versus penalties. A fee is something you choose to pay. Some annuities have fees each year to keep the account open, and they range for about 0.25%. But these fees are typically only added to the account by your choice. It's the way you decide to structure. For example, you might buy a higher interest rate guarantee. Why? Because annuity rates change week to week. So some aggressive clients will add that annual fee to account or chase after an extra 1 or 2% interest on their money every year. Let's cover penalties. A penalty is different. Now that's a surrender charge, and it only applies if you pull the money out too early. You see, if you buy an annuity, it has a term, and during that term, there's a surrender period. This is easy to see if you're building it with an advisor. Terms typically range from 5 to 7 to 10 years. That's how long you're saying, I'm going to keep my money here. That's the period of time that your money's dedicated to growing in the account. You're not designed to touch it, but if you needed to, most annuities allow you to access up to 10% of the money penalty free. And that does give you some flexibility there. So to summarize, here's what most people don't realize. Many annuities have no annual fees at all. If you leave your money in and you follow the contract, you often won't pay a penny in fees or penalties. Let's talk about number 2, the way you can design an annuity. Now, here's where annuities can actually become powerful tools. What's important for you to remember is there's 3 different ways you can structure an annuity. The first one is a growth annuity. This one's going to give you the highest interest rate in the space. It's designed for safe accumulation. It protects your money while earning a competitive interest rate. The second is an income annuity. These turn your retirement savings into a predictable monthly paycheck that you cannot outlive. In other words, if you live to be 130 years old and the value of your annuity goes to 0, you're still going to get these paychecks as long as you're alive. And the third way you can structure is a bonus annuity. And these typically range from 8 to 20%. They give you an upfront bonus for moving your money day one. They do this to jumpstart your growth, or in a lot of cases, they do this to help offset old surrender charges. If you were to move $100,000 over, you could get 8% or 10%. You can literally get $10,000 if it were 10%, or $20,000 if the bonus was 20%. And let's say that you had a surrender charge of about 8% with your current company. You're literally making 12% in addition if you got that 20% bonus annuity. Here's what's important to understand. Each structure is designed for a different need. The mistake most people make is buying the wrong one for their situation. And let's talk about the thing that's the last reason, or the most important reason why people actually buy annuities in the first place, why they matter. It's the guarantee. Unlike the stock market, annuities aren't about chasing big swings. You buy an annuity for the guarantee. And there's 3 really big guarantees. First, your guaranteed principal protection. You can't lose what you originally put in. If you put $100,000, if you put $1 million in, you will never lose that $1 million principal. This is the number one reason a client would look to put their money in annuity in the first place. It's a guaranteed place of protection against market downturns. The second is guaranteed growth, or a crediting method. Now, this depends on the going rates at the time of application, but let's say your contract had an interest rate cap of 9%. If the market had a really good year, you're guaranteed that 9%. Finally, there's the guaranteed income for life. If you structured your annuity for income, you receive that paycheck every single year for the rest of your life. Again, even if your account value is 0, they just keep paying you. It's less about hitting a home run. It's more about making sure your retirement plan never strikes out. So here's the last section, which is the most important questions you need to ask before you buy an annuity. Number one, do I want safe growth, income, or a bonus up front? Next, how long am I comfortable keeping the money in this place? Finally, which guarantees matter most for my retirement plan? To help you dive deeper, guys, I created a free guide. It's called Before You Buy an Annuity. It's a simple paper summary of the terms and definitions we covered here today, so you can keep it handy and refer back to it anytime. Second, if you're here, you likely have a personalized annuity quote coming your way. So the next step is to connect with one of our advisors to go over your options. They'll walk you through how and if this can fit into your retirement plan and answer any questions along the way.